Trump is ramping up his attacks on the U.S. Federal Reserve and its members. He's now calling on Fed Governor Lisa Cook to resign after an administration official accused her of potential mortgage fraud. Now, Cook was appointed by former President Joe Biden, becoming the first African-American woman to sit on the Fed board. Replacing her would give Trump a new opportunity to influence the central bank, which has so far ignored his calls for lower interest rates. Bill Pulte, the head of the Federal Housing Finance Agency, told CNBC why he believes Cook is unfit for office. Listen.
We allege that she bought a condo in July of 2021, and 14 days before that, we allege that she took out a loan using a Fannie Mae and Freddie Mac form, stating that she had her primary residence in Michigan. 14 days later, as I said, she went and purchased an Atlanta condo. To make it worse, she then went on to eventually list the apartment and probably is renting it out. This is a very serious issue.
Now, Cook responded in a statement that she has, quote, no intention of being bullied to step down. Now, all of this is coming as newly released minutes from the last Fed meeting show most officials are still against cutting rates because of the concern about inflation. Now, Fed Chair Jerome Powell could give some insight into the Fed's policy path on Friday when he delivers a closely watched speech in Jackson Hole, Wyoming. Now, U.S. stocks finished mostly lower amid the ongoing Fed rate cut debate and because of new concerns over tech valuations and AI spending. The S&P 500 fell for a fourth straight session now. Kristen Holmes joins us now. You know, I want to get back to the fact that Lisa Cook is now defending herself, although she didn't specifically talk about the allegations. If Lisa Cook doesn't resign, is the Trump administration suggesting that, and clearly she's not, at least from what she said, suggesting that they will fire her?
Well, right now what they're suggesting is that they're opening an investigation. We know that Pulte wrote a letter to the Department of Justice on August 15th with these allegations against Cook saying that she committed mortgage fraud. So that is the first step in all of this. But then we also heard from Pulte on his Twitter today, he seemed to be posting the various bylaws on removing a governor from the Fed board, saying that, yes, one option is that they resign, but the other option is that if there's cause, the president could remove that person. He specifically highlighted that portion and said he believes that the president does have cause in this case. Right now, though, these are just allegations. And of course, we want to look at the bigger picture here, which is this appears to be part of the larger pressure campaign against Jerome Powell, the Fed chair. President Trump has been repeatedly attacking him over the last several months about these interest rates. We also know that he just instated another loyalist to sit on the board of governors after another Democratic appointee resigned earlier this month. So this has been an ongoing effort, not just on the behalf of President Trump, but also by his administration. The other part of this, just keep an eye on, is we know that top officials, including the Secretary of Treasury, for example, have warned President Trump that he cannot actively get rid of Powell, that it would hurt the markets very badly. But what we've seen instead is this kind of roundabout way of trying to strong arm the board and the chair. For example, we know that this investigation has been launched into the new Fed building with Trump's allies and advisors saying that, essentially alleging that Powell is committing some sort of crime by spending too much money, too much of the taxpayer dollars on this building. We saw Trump tour that building with Powell last month. But this, again, is a maximum pressure campaign as they try to get these people, including Powell, now, of course, Cook, to resign, and they can flood the board. They can appoint their own chair. Doesn't seem likely at this point it's going to work, at least given Cook's statement and, of course, what we've heard from Powell. It's not going to stop them from launching an investigation and, again, trying to exert maximum pressure.
Kristen Holmes for us at the White House. Appreciate it. Now, one of the potential candidates to succeed Jerome Powell spoke earlier with our own Richard Quest. James Bullard, the former president of the St. Louis Fed, said he expects the central bank will cut rates next month and has further room to go. Listen.
If you take typical rules that are used and calibrate this, you would find that you get the current policy rate a little bit higher than what you would really need to fight the remaining bit of inflation that remains above target. So I think that's why the committee has room. I think they'll go 25 basis points in September. and they won't make too many promises, but I think they'll end up going another 25 basis points in December. And then what I'm suggesting is you could continue that into next year. If the data cooperates, you can move that up and move faster.
So if you do that, I mean, are you in the school of thought that says, well, over the long term, the 2%, et cetera, or would you be in favor of changing the inflation target? Because there comes a point, if you, let's say you lower rates by, if you wanted, up to 100 basis points, that is certainly going to put some petrol on the flames, as we would say. And it will make it almost impossible to get back to 2% in the medium term.
I would definitely not change the inflation target. I think that's become an international standard. I think if the United States went off that international standard, you would set up a period of chaos like the 1970s, where you had high and variable inflation really around the world. It took years and years to get that under control, so you really don't want to go back to sort of anything like that. The 2% target, though, I think can be hit and will be hit, but you want inflation to asymptote slowly and nicely into the 2% target, and that's why you have a little bit of room to bring down rates toward the neutral rate, closer to neutral, as inflation continues to come down toward target.
Jared Bernstein joins me now. He is a former chair of the White House Council of Economic Advisors. Good to see you. I do want to start with this controversy with Lisa Cook. I mean, the allegations are out there. There must be an investigation, and yet this is already pursued in a way by the Trump administration as if to determine that she's guilty. She is pushing back, although she didn't address the allegations categorically. I mean, do you believe this is as plain as it can be? It's a pressure campaign from the White House to get rid of a governor they don't like.
I very much believe that. And I think that President Trump and FHFA Director Bill Pulte, who's behind this, and other such accusations of other people they don't like, have zero credibility around these kinds of accusations. Note that I didn't say low credibility, I said zero credibility. They are wholly motivated by a campaign to attack the Federal Reserve in this case, or for that matter, anyone who says anything or reports any data that they don't like. This completely undermines any substantive case they have at hand, and this is just another example of something we should be very careful to weigh against those kinds of actions from this administration.
And I do want to get to that issue of independence, right? Senator Elizabeth Warren is warning that the president and his administration, in her words, should not weaponize the federal government to illegally fire independent Fed board members. If we broaden out the aperture here a little bit, and we even take, some of the firings that have happened in terms of data, right, in the United States and the head of labor statistics there, do you believe this is gaming in the system, gaming the data in a way that is dangerous for the United States?
Unquestionably, I believe that's exactly what it is. And my first set of comments was underscoring exactly that point. Anytime you see them going after someone who's reporting something they don't like, who's unwilling to do their bidding on interest rates, don't assume that that person is guilty of anything other than doing their job. There's no better example of that than Erica McIntarfer, who is an exemplary commissioner of the Bureau of Labor Statistics, simply reporting the data. These folks live in an alternative reality. And when anyone outside of that reality, that is in the real reality where the rest of us live, contradicts their alternative vision of the world, that person gets in trouble, or they get accused of a crime through weaponizing, precisely the right word, through weaponizing the agencies and the power that they have at their disposal. It's all very dangerous, and where this has led in other countries with authoritarian plays of this type has been very destructive to the economic system. So we should be very, very careful about taking any of this other than what it is.
And we want to talk about the consequences here. I mean, we were talking about the 1970s. You wrote last week that the 70s should have ended the notion that any White House can really influence the Fed without dire consequences, right? The Fed, as you point out, yielded to pressure from the Nixon administration, kept interest rates low, and what did we get, right? The rest is history. Abysmal record on inflation, high unemployment, a bruising recession. And yet when I listen to any of these candidates, I mean, look, we just listened to Mr. Bullard. He seems to have taken the lesson from history. Is there anything really to be afraid of here? I mean, most of these candidates do seem highly qualified.
Well, it's a matter of who Trump gets in place on the Federal Reserve and whether that person is willing to do his bidding. Now, look, the president couldn't be clearer about the messages he's sending to potential Fed nominees. If you give me the numbers I want, if you do what I'm putting you there to do, you'll be fine. And if you don't, you'll have a problem. So perhaps you're right. Perhaps students of history will prevail. And you're absolutely right to raise history, because the history is very clear on this point. When you compromise the independence of the central bank, very bad things happen to the economy, particularly in the overheating space, which is exactly what we don't need right now. We already have tariffs putting upward pressure on prices. So we really shouldn't be fooling around with Fed independence in this climate. But Trump has been absolutely unequivocal. If you don't do his bidding, he'll come after you. So we'll have to wait and see.
Mr. Bernstein, I'm interested to get your insights as to why we have not heard from corporate America about any of this. The CEOs, the executive class has been, the silence has been deafening, to use another cliche. Why do you think that is, and do you think it's time they speak up?
I definitely think it's time they speak up. I think as you just said, and you nailed it, their silence speaks volumes. I think they're afraid to go after Trump or to criticize Trump or to criticize the kind of decisions he's made. And it's actually, I think, a very unfortunate fear on their part, because I think that ultimately this will hurt their bottom lines. If they can't get accurate data because the Trump administration has taken control of the data system and is churning out not accurate numbers, but the numbers they want to see, that goes down the road of Greece or Argentina or countries that have been punished globally when global investors don't trust the data that country's putting out. And what do? Creditors in that case want a higher return on their loans, and so interest rates have to go up. Businesses pay for this. So I think I would love to see these business leaders get some spine. I understand going after Trump is not a low stakes proposition. If you're in the business community, he'll punch back. But now's a great time to get a little bit of courage.